get straight into a look at the kind of movement we're seeing on the currency front. We've seen Rand leveraging off some of that euro strength, but also to bear in mind is that we've seen dollar weakness come through in tandem.
Yes, indeed, Alishia. Yesterday we did see a spike higher in the morning on the back of thin liquidity, but later on in the day, as you mentioned, the currency seems to be leveraging off what's happening in the euro and with regards to the dollar as well. There was also very little with regards to market moving data which came out yesterday, the vehicle sales data as well as the consumer confidence number, which was the second tier sort of data, didn't really impact the currency that much. But we are going to be, well, the currency will remain pressured on the back of the fact that there's no real solution happening in the US with regards to the fiscal cliff and that debacle there. So the dollar is going to remain under significant pressure, and we're going to be leveraging off those type of movements. We are expecting to see a very similar range today on the back of the fact that there is no local data coming out. So we're looking for a range more or less in the region of about 877 to about 889.
Shireen, while there's no local data coming out today, all eyes on the SARB's quarterly bulletin tomorrow.
Yes, Alishia, we have two numbers that we are looking out for tomorrow. We are looking for the household consumption expenditure number, which is expected to have declined in the third quarter. If you recall, the second quarter numbers saw a slippage to about 2.9% quarter on quarter. We are expecting a further slippage in the third quarter to 2.3% quarter on quarter. And just looking at what happened with regards to the consumer confidence numbers, we saw consumers rating of the present time to buy durable goods slipping to a low which was last seen since December 2009. So that is an indication that we're going to see a much slower consumer activity going forward, and that is going to drag down our overall household consumption expenditure number for the year. We are currently pricing in a slippage to about 2.7% for the year from 5% that we saw last year. We also have that very important current account number for the third quarter. If you recall, the second quarter saw a ballooning of the current account deficit to about 6.4% of GDP. We are expecting a slight compression to 6.2% of GDP, while the market is expecting the current account deficit to widen to about 6.6%. Now, just looking at the detail of the number, the trade numbers for the third quarter of this year showed significant trade deficits coming through for that third quarter. But once the SARB makes some kind of adjustment, we could see a fairly favorable number coming through for the trade account. Having said that, the net invisibles accounts, which really takes into account the dividend payments to foreigners, which we are expecting to still widen in the third quarter, and that's going to still add that type of pressure coming through for the current account deficit. We do, however, believe that the current account is not likely to slip to below sub 4% for this year, and we could possibly see a current account deficit number for the year as a whole above 6%.